May go away. Trend precognition points to a post-halving correction, and we are seeing it develop now. Hey guys, hope you've been prepared for this. We've been talking about this for quite some time, so I hope you weren't caught off guard. I hope you were prepared for a correction because we're seeing it occur as I speak, as I move my lips. Um, that doesn't probably help you if you're caught in this right now, but we're going to try and shed some light on things and hopefully, well, either this is either this analysis is going to talk you off the ledge or push you over it. But first, a quick bit of housekeeping. Of course, I'm not a financial advisor. I don't provide financial advice of any way, shape, or form. Nothing I say or share should be considered trading or investment advice. Trading is risky. Do your own research, manage your risk, and never risk more than you can afford to lose. So, obviously, a big move on the overnight after the monthly close, and we got a new signal. So, let's start there and see what we can figure out along the way, right? So, let me get into a screen share here. We're going to share the candle chart and talk about what the breakdown was. We could debate what the catalyst was for this move, and that might not be time well spent. So let's focus on what's important and what the technicals are that got us here, right? So um, we had that. I've been talking for a long time, right? We got this new trend precognition signal here, and that signal is, by the way, tentative until the candle close, as is the case with TradingView. However, something that's positive about this that leads me to believe that it will indeed validate is number one, it occurred instantly at the open close, and number two, look at the strength of this signal. That's about a 58% probability. That's a high probability score, and typically when we see signals that appear right at the open close and that have this kind of strength to them, they tend to print. So doesn't mean it will, and it also doesn't mean that price can't come back into this range. What it means is price is not likely to go up to back up to all-time high territory this month. It's called may go away for a reason, right? So in terms of what's happening now, obviously we have Fed Chair Powell coming to speak here and really just about an hour and a half. So FOMC meeting going on today, yesterday, and today. Nobody expects to see a rate cut or a rate hike at this point. However, the world is listening to Fed Chair Powell, listening for his tone, listening for his words, and really important to listen closely and read between the lines because he always kind of drops some breadcrumbs along the way to give us some clues of what the Fed is thinking and what their actions might be down the road. Now, in the past, he has been talking for quite some time about the potential for 3/4 point rate cuts this year, between whenever and the end of the year, and for a total of 75 basis points. And sentiment for that among traders or among the markets seems to be fading, right? So high for longer is already baked in, and I think that even scaling back from potentially 3 rate cuts could also be somewhat baked in. I think what the real concern is that he alludes to potentially no rate cuts coming in 2024. And if he does, I think the market is not going to love that information. Now, if he still walks the line on feeling like he can get 3 rate cuts in this year, well, I think the market would be receptive to that, and we could see a rally. Now, in terms of the mechanics of what this breakdown was all about, this is where it happened here, right? And we have been talking about this for a long time. We needed to see the lower low protected from March, okay? And I can now zoom into some lower time frames to make this easy. We actually have been talking about. In fact, yesterday I even said that we had. I'm going to go ahead and turn off trend precognition, by the way, to make it chart a little bit cleaner. We had talked about the issue with the strength of the move, or the weakness, if you will, of the move attempts to break 69K. And I had spoken about all of these wicks below. And I said yesterday, hey, if we get so much as a wick below this lower low, then that to me shows a sign of weakness that we could see things break down further. Well, we got that wick. This is before the monthly close, by the way. We got this wick, and What happened was looking across different exchanges. I noticed, in fact, I did an update on this late in the afternoon yesterday, is that it was indeed a lower low on some exchanges, but not a lower lower on others, namely Binance, which is the largest exchange by volume, exponentially larger by volume than all the other exchanges. So that to me maybe had a hint of hopium that I probably shouldn't have even focused on, because the breakdown that occurred after that, after the monthly close, happened faster than even I expected, right? So because we have, of course, Fed Chair Powell coming to speak today. So in terms of this breakdown and where we could go from here, we've identified these targets and we've talked about them for a very long time, right? Prior consolidation levels are very, very important to me. They provide structure in the chart, and that structure could be support on the way down. It could be resistance on the way up. And so as I've been saying for quite some time, if this one doesn't hold here in the 50 to 52K range, then I look to this one here in the 40 to, this was 40 to 45K, but really the sweet spot down here around 40, 44, 45K would be something that I'm looking at. Yes, there's potential that it could be here at 48. Anything can change, right? All the conditions can change. These are just targets that I'm eyeballing. In terms of where we ultimately land, whether this is indeed the move or there's more to come, remains to be seen. And we can't rush to that conclusion. We've got to, wait for some candles to develop, let the order book settle down after today's Fed announcement, and see where we go from there. But in terms of order book liquidity right now and these moves, as it were, I've been calling. I've actually shown you just so much history, and I'm gonna revisit it briefly here to show you the history of these moves around halvings, right? So we just had the halving here a week or so ago on the 20th of April, right? And I had shared with you previously many occasions where we had corrections and consolidation around halvings. We can take it all the way back to the first halving in 2012, a mere 8% and change off of that first one, but bigger corrections happening after that. But this was like literally right after the halving. And so actually, it looks like there might have even been a smaller one here right after the halving. This actually took some time to develop. It was a few weeks afterwards. So then we move into the 2016 halving, and you can see here a deeper correction here happening. This one, if you said it was from right after the halving, then you're at 30%. If you looked at what the high was going into that, it was closer to 40%. And then, let's keep progressing. And again, more corrections here, more corrections here. This is it's clearly a bull market, but you can still have these corrections in a bull. And then, of course, we had our all-time high in 2021. Things broke down. Let me just mute those things here for a second. Okay. Sorry about that. And so now we have the third halving here in 2020. And again, corrections happening right after the halving. Okay, right before, right after, and a period of consolidation afterwards, right? An extended consolidation afterwards, mind you, before things took off afterwards. So I'm not shocked by what we're seeing now by any stretch of the imagination. We've been talking about it for literally months. So it is safe to anticipate that to happen this time as well. Now, what is this retrace going to be? And why might we go here? This move up and this move up, they happened so fast with no retest. I mean, quite frankly, everything this year has happened so fast with very little retesting in some important ranges. Okay. And those consolidation ranges were good. This one, probably the most important one, around 25K, that was really the foundation for the move up. Never got retested down here. Climbed up rapidly and never got retested down here. Broke out of this, never got retested. Broke out of this, never got retested. So safe to say we're due for a retest. We've already got, over a 20% correction. So technically, does that satisfy the 20 to 40% we've been talking about? Well, on the low end, yes, I guess it would. But it doesn't mean that there's not more to come. In fact, we're seeing more extend right before our eyes right here. So these are indeed viable targets, in my opinion. I personally like this one the best, selfishly, because it would enable me to buy more Bitcoin at a lower price, but also because of the amount of time we spent consolidating here. To me, this is the strongest part in the chart in this near range, if we could call that near. This would, of course, represent a 40% correction. This would represent a 30% correction. Where we're at right here is a little more than 20%. We're at, what do we do? 23%. Down here would be 30%, and down to the 40s, 45K range would be around a 40% move. Okay, so all of that is, those are all viable targets. Now, how likely is it that we go there? Well, at the moment, we can look at liquidity in the order book, use fire charts to see liquidity in the order book. And the first thing that I'm seeing right now is, okay, so obviously we talked about this big TWAP strategy that had been going on out of the lower class, and that had continued, maybe leveling off a little bit now at this point. We'll get into that in a second. And we see some more bid liquidity coming in here into the range around 55K, a little above that. This may be trying to serve as plunge protection before, through Powell's speech. And same thing to the upside, a guardrail up here, maybe keeping price suppressed. There are some shorts in this range ripe for liquidation. So there's always that glimmer of hopium for anybody looking for an exit at this point. So let's widen out a little bit and see where the liquidity is truly consolidated, to see if we have enough to get that, really what we want to see for a bigger breakout move. And at the moment, let me expand this for us. At the moment, and yes, in case you're wondering, today was like a 3 cup of coffee day. At the moment, we don't see really any sentiment for anything sub 50K. That can change in an instant. It does when price moves towards that level, right? So if this was broken here, then yes, we could expect to see some liquidity come into this range down here. But for the moment, we don't see anything down there. So that has us up here above 50K. Heaviest concentration in this 52 to 53K range, slightly even higher than I was thinking here in the 52s. So that's interesting to see. We also, of course, have some in this 55K range. Now, if these were consolidated at one level, and we were looking at what, 50, 60, and another 55, so 110, 115 million in bid liquidity in one spot, then I would feel good about saying this is where we're going to bounce from. Be patient; it's going to happen. Because if we look at history, we can see that that's really what the history has been like. That's really the kind of concentrated liquidity that we want to see for a big move up. Look at this. This is 111 million. This is 96 million with another 93 million and another 58 million below that, and so on. It works in both directions, right? We could get a big sell wall coming above us and knock things down lower. But for the moment, thinner up here means there's room to move. And this looks to be where support is developing the most at the moment. And again, these things can change. The order book is a living, breathing, organic beast, and these things can change very, very quickly. At the moment, this is where the focus is. At the moment, we see a ladder of bids from really the strongest part, from 53K up to 56K. And, expecting obviously some volatility around Chairman Powell's words here coming up here in just a little bit, about an hour and 15 minutes or so from now. So I think that really kind of covers the, most of what's really important today. Yes, we can talk about the ETFs, but quite frankly, they're playing the market just like the rest of us are. Okay, so Hong Kong, I haven't seen any reports on Hong Kong ETF flow for yesterday, which was day 2. But needless to say, it has not been as robust as a lot of people had hoped. So it's not surprising that BlackRock and Fidelity and really most of the ETFs are taking a pause here, waiting for that opportunity. Um, I'm doing the same thing, right? So I did buy some dips in the past 24 hours and got a little help from the MTF mean reversion indicator to make a good call. Haven't seen one of these this deep in a long time. Um, whether this materializes into a stronger upside move or not, really, I think has a lot to do with the sentiment we get out of the Fed later this afternoon. With that, I'm going to wrap it, guys. Unless there are any questions, let me just check real quick. I will. I've had some comments about the descriptions because when I was doing these originally on Twitter or X, whatever you want to call it, I was writing a long description in the post. Now that I'm streaming these, it's not allowing me to do that straight to Twitter. So you can read the long description in the YouTube post. This one I think is really important. So I'm actually recording YouTube first, or actually doing this as a live stream on YouTube first, and I'm going to post them on Twitter with the longer description. So that will be there for you as well. I appreciate the support, guys. Keep it coming. If you like the content, please do me a favor and smash all the buttons. Help me grow this channel. That really helps a lot. And your comments really mean a lot to me. I really, really appreciate them. And the engagement helps us grow the channel so that I can continue to do these for free in the days, weeks, and months to come. I enjoy doing it, and I hope that you guys are getting something out of it as well. I'm going to leave you with a parting shot of the order book and fire charts and see what I'm hoping for. What I'm expecting is potentially, look at this. We have a roof pull right here at 62. This could be a trap, but that's okay. If it allows price to go up, let it happen, right? Let's see if it went up any higher. It did not. And did it come any lower and turn into a market order? It does not look like it did. So potential, we see some things tracking up this way before the end of the day. Fed Chair Powell coming up in just about an hour and 10 minutes. So we'll look forward to that. If I have a chance to break in later on today with any updates, anything significant, I'll do so. Thanks again for the support, guys. I appreciate it. As always, trade safe and have a great day.